it going, traders? It's Ricky with Tactbook Solutions. So for today's video, we're going to be talking about risk/reward as well as some risk ratios. When it comes down to trading and when it comes down to planning out your actual trades and being able to manage your risk, how is it that I personally manage my risk and see if a stock is worth trading? In this video, I'm going to be sharing exactly what it is that I look for before entering a stock and the risk/reward that I try to identify every single time before buying it. I hope you guys enjoyed today's video. This video was made based on a Tactbook Solutions member request. If you're not a part of Tactbook Solutions already, the Facebook group link is down below. Again, it is a 100% free group. We're over 30,000 members worldwide, and the thing that we do best is we provide a supportive community for both new and experienced traders. Thank you guys again so much for tuning in. I hope you guys have an amazing day and take care. Alrighty, traders. So when performing a technical analysis, if you guys don't know how to do that already, you want to make sure that you at least you know the basics and fundamentals of support and resistance. If you don't, I have a specific video that if you go within my YouTube channel under helpful videos, I talk about supports and resistance and how to be able to identify them. So supports are usually where a stock bounces. Resistance is usually where a stock reaches a peak. Understanding that it reaches a peak at $17 as of today, meaning that it struggled to go above $17. Therefore, that is where the resistance is at. And you can tell during pre-market hours, the resistance is at 17, meaning that it struggled to go above. Knowing now where to identify the support. Well, it looks like JNUG took a pretty big dip and is now bouncing at about 16. That means that I have a margin of profit from $16 to $17. That is about 6.12% from top to bottom. Understanding that my potential for profit is 6.2% and my potential for loss is a little bit less. And I'm going to explain to you guys on how I calculate that. I want to make sure that every time I choose to go into a position that I'm getting in at a good buy, that I'm getting in when it's showing signs of upward momentum, meaning that instead of trying to get in at the lowest price, I wait for the bounce and I wait for it to start showing me some green candlesticks that it's starting to climb back up and holding above the support. So what I did with JNUG, and I'm going to show you a couple of examples, is first I identified the resistance, then I identified the support. I know where a good buy point is, I know where a good sell point is. Therefore, people are going to be able to identify that the demand for JNUG at $16 is going to be higher due to the support being at $16, therefore leading to a price increase. Does that mean 100% that JNUG is going to increase in price, or it cannot break support? No, and that's why it's so important to be able to manage your risk. Every single time you choose to invest in something, you want to make sure that you have some form of calculated risk created in the actual plan when it comes down to trading. If you guys can see right now, it's at 1601. So I'm in right now at an average of 1610, and I'm in with about $3,000. $3,000 is about the average position size that I take per trade. Understanding that yes, penny stocks are risky, understanding that investing in the stock market altogether, 90% of the people that invest lose money, 10% end up making money. Well, what is it that 10% do end up doing better than that 90%? Well, it comes down to risk management, and it comes down to understanding what they're investing in, being able to identify that you're getting in at a good buy, and being able to identify where's a good place to sell. Knowing that I'm a day trader, am I going to go back, year to date and say, well, if I go 10 days, I believe that within me buying JNUG here at $16, that I can later sell at $20 all within one day. Is that realistically possible? Well, understanding that it took, a 10-day period for it to go from $20 all the way down here to $16, realistically, it is not possible or realistically possible for it to go from $16 all the way up to $20 all within one day. Understanding what's a little bit more realistic, I like to do a 1 to 2 day analysis, say usually where it peaked out at or hit the bottom line. Understanding that, it gives me a better understanding on where a good buy point is and where a good sell point is within the intraday. Understanding that I can identify a good buy point, a good sell point, that within a day I can later sell for a profit. Does that mean that 100% my plan is going to be, risk-free and that I'm not going to risk any money? Well, no, when it comes down to investing, there's always this form of risk, but it's how you calculate it and how you manage it. Now that I know what my potential for profit is, and again, for those that weren't listening, it's about 6%. Understanding that from $16 to $17, my potential for profit is about 6% profit. What that means is I'm gonna move you guys over here to this Excel sheet that I created, and it's called the PBP checklist. What this means is you can add the series of stocks that you have within your watch list, and then you can filter all the stocks within your watch list and solely focus on the top stocks that meet your criteria within that specific day. meaning that the RSI is below 35, above $100,000 volume, and showing signs of upward momentum. Understanding that this is certain criteria that will filter the stocks within your own watch list, creating some type of like scanner, but at a much smaller pace, and you have to perform a technical analysis to be able to identify the potential, itself. Now that you have, let's say, we came up with JNUG, the support, now that we understand, is at $16, the resistance is at 17. Now let's put JNUG, but this is where we're going to put it. My purchase price is at 16.10 because that's where I 16.10 because that's where I purchased it. My target sell price is about $17, but understanding that the resistance is at $17, realistically, I would be okay with selling it at $16.90. Understanding that there's always this form of risk, how am I going to be able to manage my specific risk when it comes down to investing in JNUG? Well, understanding that I got in at 16.10 and that it bounced at lows of 15.94, my stop loss is currently set at 15.93, meaning that when it breaks the support here at 15.93, that my order will automatically sell and I will have cut my losses and sell all my positions. Therefore, what is my form of risk? Well, if I bought in at 16.10, this will do it for you. You put your stop loss here at 15.94, and again, your stop loss does not have to be as tight as mine. Now that we formulated this whole plan, it tells me that my potential for profit from 610 to 690 is 4.73% profit, when my potential for risk, meaning for loss, is 0.99, so right below 1%. Therefore, my potential for profit is about 4 to almost 5 times greater than the potential for risk. Therefore, this risk with my criteria and with what I like to invest in is worth taking. People were asking me, what is the certain criteria or risk ratio that I look for? There is no exact ratio that I can give you when it comes down to trading that will automatically lead to your success, and you could always end up in the green. What I usually like to look for is at least for my risk for profit to be twice as much as my potential for loss. What I mean by that is, as long as your potential for profit is twice as much as your potential for loss, then I can, in a sense, make sense of that trade. That doesn't work for anyone. That doesn't work for everyone, and everyone's always going to be different. They might be looking for 4 times more, the potential for profit than actually the potential for loss. Something like JNUG, right? Because this one shows, a good amount of potential for profit, almost 5% from my entry to my sell point, and the potential for loss is very minimal. So I'm really risking a little bit over $3,000. I'm risking a little bit over $30 because of my stop loss here at 15.93. I actually have to move that 15.93, so that should put me at 1.06%, and my potential for profit, again, being a little bit greater from 16.10 to 16.90. But overall, I understand, again, the basics of risk management, that my potential for profit is much greater than my potential for loss, so therefore this risk would be almost 1/4 or 1/5, or 4/1 or 5/1, meaning that I'm going to be making 4 to 5 times more than what I'm actually risking when it comes down to percentages. Now let me give you guys another example. This is actually one that I traded this morning. I'm not too sure if you guys followed up with my live stream, but pretty much what we identified here within RIG was, if I take a step back and we go back about 10 days, it's been showing the sign of upward momentum after this huge drop that it had. So I saw that it was showing signs of upward momentum. That shows my criteria. I was able to identify the support here at 810 because it was showing signs of upward momentum. And what I looked for was, it would usually bounce at the support, meaning this line at showing signs of upward momentum, and this resistance all within one day. And that's what I wanted to do. I wanted to make sure that the support and resistance can be met all within one day, because I'm a day trader and I don't want to hold it overnight. What I saw was, although it did bounce at the support, around the support, it's not exactly or perfect, especially because it's more showing signs of upward momentum, so it doesn't go on a straight horizontal line. But because it's slanted and because it's showing signs of upward momentum, the only thing that I wanted it to do was, due to it holding above $8 as of yesterday, that's where I identified the support, and all I wanted to do was for it to hold above $8. Therefore, I tried to get in at 805. It never got filled, so then that's when I put my position for 808. So I got filled at 808, and now again, it comes down to risk management. I got in at 808. I knew that the support was at $8. Therefore, if I got in at 808, my potential for loss was a little bit less than 1%, and I understood that the resistance, it being able to be hit within one day, and if I go one day back, it was at highs of about 830 to about almost 835. Understanding that realistically, I believe that I can hit that all within one day. I knew that my potential for profit from where the support was at $8 to the resistance at about 835 to 840 if I go far enough back. as you guys can see right here. So I understand that let's do an average. My target sell price was about 835. And the reason that this trade was a little bit different was because I had my stop loss at 7.99. Again, my potential for loss being 1.1% and my potential for profit being 3.23%. Again, my potential for profit was about 3 times as great as my potential for loss, meaning that that risk for myself was worth taking. Now, when it came out to actually playing out on this specific trade, because I used different indicators to get a better understanding on where the stock is and how it's actually moving, I saw that it had a resistance all day yesterday and it wasn't able to break above $8.20. Understanding that, I got in at 808 and it was struggling to break above 820. I didn't like that the RSI was showing signs of, overbought. Therefore, it would indicate, people are going to start selling off. So that's why I locked in my profits at $8.20, meaning that I only locked in, instead of my target profit at 3.23%, I actually ended up selling at 820. So what does that mean? Did I end up making a mistake? Did I end up, risking more than what I expected? Well, no, I stuck to my plan. I identified the support. I identified the resistance. I identified, what made sense to me all within one day, what the potential was. But what it actually ended up coming out to be was I saw that there was a resistance at 820. I didn't want to take the risk of it coming back down and then stop lossing out. So I made the decision to lock in profits. Is that the wrong choice? Well, I'm a little bit more of a conservative trader, and I believe that consistency is key. I'd much rather lock in my profits, long term, because I understand the power of compounding interest, and I understand that although this isn't, a huge amount of profit, I'd much rather stay in the green and at least understand and see what, the graph and the trend is telling me. It's telling me that it was more on the overbought side. It was telling me based on yesterday's trend that there was a resistance at 820, therefore validating the resistance today at 820. Therefore, it might not actually break above 820 and start to see a downward trend and then break the support. So instead of risking it all and hoping for the best that it goes to that resistance at 835 or 840, I locked in profits and I walked away. And that's what made me make the decision to then, invest in JNUG after this huge drop in the sell-off and, going into that. But one of the things that you have to understand, just because you set up a plan in the beginning on what your target sell price is, does that mean that that's where you have to stick exactly to sell your price? Understand that, it's not about hoping for the best in the stock market, but as much as it is to react as quick as possible to how the actual stock is indicating to perform. And with what I saw when trading RIG was I saw the resistance at 820 to be too strong. It wasn't breaking 820. It doesn't mean that it won't break 820, but based on what it was that I was risking, based on the potential that I saw in JNUG, I saw there to be more potential on JNUG and why I can enter at $16 than the potential that I can, hold RIG instead of locking in profits, which then I can hopefully later sell at 835. I just wanted to explain my whole thought process. I wanted to explain why I bought in, why I sold, and how I manage my risk. It doesn't come down to, lock in always the most amount of profit, but always, understanding that the power of compounding interest is very important, that consistency is key, and it's always ideal to be able to keep losses small and to keep profits much bigger, 2 or 3 times or 4 times as great, because in the long run, if you can keep your losses small and you can keep your profits twice or 3 times as big, even if you take 2 or 3 red days, because your profits are so much greater, you only need to have 1 green day for maybe 2 or 3 red days to break even. Well, I hope your, in a sense, success rate is a little bit greater than 20%, therefore, or 25%. Therefore, you should have no issue, in a sense, staying in the green. But again, it comes down to the understanding of being able to identify the support, the resistance, setting up a plan, and being able to react quickly when the stock isn't, performing the way that you expected. And that's really what I think that has led to my success. A lot of people don't necessarily like my specific style of trading because it's a little bit more conservative. I lock in smaller amounts of profit, consistently. And it's not the type of, dramatic, momentum trading that everyone else does. Again, this is my style. This is what, I'm comfortable with. And it's something that has led to my success. When risking $3,000 per trade, if I can do 2 to 3 trades per day, I can lock in around $200 and $250 worth of profit, which is, for about 2 hours a day is worth my time and worth my investment. And it comes down to as simple as that. I'm not here to prove myself to anyone. Just like yourself, you're not here to prove yourself to anyone. Do whatever works for you. And again, my style might not be the best for you, but understand there's a bunch of different styles that you guys can explore within, tech buds as well as all of YouTube, because there's so many different people that share their ideas and share their whole thought process. The only thing that I want you guys to understand, and the thing that I do want you guys to encourage you, is understand that you should never base a trade on anyone else's opinion, meaning that you should not solely make an investment based on what someone else is telling you. Also understand that if you can't manage or make sense of your investment, then you shouldn't be trading it. If you don't know how to manage it, if you don't know why you're buying or why you're selling, then you shouldn't be trading. Maybe you might want to take a step back and try simulation trading to get a better understanding on the fundamentals of actually, the whole mechanics of trading and what can lead to your success, proving to yourself first within a paper trading account, which is fake money, that you can be a profitable trader, and then make the decision once you've proven to yourself to move over to an actual brokerage company and start risking real money once you know that you have an actual success rate. And then the last thing is to always plan out your trade. Know the importance of being able to identify a good buy point, a good sell point, and where to cut losses. Also, don't be afraid to lock in profits along the way, because like I said, it's much more important to stay consistent and stay in the green than to, cut losses and be a little bit riskier that way. At least that's what has led to my success. So I hope you guys enjoyed today's video. If you guys did, please give it a thumbs up. But most importantly, if you guys are not a part of the TechBud Solutions group, please feel free to click on the Facebook group link down below. We're a little bit over 30,000 members worldwide with all the different platforms we have available. We're almost approaching 24,000 members within the TechBud Solutions Facebook platform, and we have a series of group chats and just networking platforms where you guys can utilize to share best practices and share mistakes in effort to promote growth. I hope you guys found today's video entertaining. If you guys did, we'd appreciate the subscription, but most importantly, feel free to comment down below something that has led to your success and what you guys would encourage new traders to understand when trying to get into trading stocks. Thank you guys again so much for watching. I hope you guys have an amazing day. And like always, let's make sure that we end the year on a green note. Take care, guys.